All right. Good morning, everyone. Tim Davis here coming to you guys with another quick video, trying to keep you guys updated with this price action in this market. And yes, we are still in a bear market. And yes, prices are continuing to sell off after these short rallies. Here is I'm currently looking at a daily chart of the Dow Jones futures. And I'm going to highlight a couple of these in here. So back here around March 8th, there was a little rally, and then we traded sideways for a bit, and then we sold off. Okay, took us to around May 23rd or May 20th. Another short rally back up to the 50-day moving average. Sideways a little bit, and then another sell-off. So as you can see, we are in this zigzag pattern lower on the daily and on the weekly charts as well. You'll see this zigzag pattern, and we'll probably be in this motion, folks, for a while. So do not fall in love with these rallies, because they will be sold off and more than likely sell off to lower lows. So we had that quick, and this was a quick one right here. This was a quick sell-off right here, and a quick rally around June the 21st. Quick rally back up to the 50-day moving average again, and look at that. This one's even quicker, starting another sell-off. Now, I think we'll probably run back down to test this low here, since we are approaching this is the last day of the month, trading month, and I think it's the last quarter this week, and earnings starting this week. So I would not be surprised to see this pull back right back to test this low, and I'm gonna show you guys what this low represents that we recently hit back around the June 21st. Drop below 30,000 on the Dow futures, and we got to bounce back a couple hundred points back up to the 50-day moving average and pull on right back for another test. Now, another test of an area of support. We could get a bounce if we do hit that level, and if we do get a bounce, I'm looking for it to be a very short-lived, and probably just like this one, and maybe another bounce to possibly test this 50-day moving average, very short-lived, and then we probably will roll right over and break this support level. Now, what does this support level represent? Glad you asked. So look at the 3-year chart. This support level represents, and I'm telling you, folks, if once we break this, we can really see an extreme move to the downside. Represents the high we hit right before the COVID plunge. This is on the Dow Jones futures. Represents the high we hit on the COVID, right before the COVID plunge. Now we have been testing that high. We've been testing that level of support, folks, for quite a bit. Look at that. Kind of almost tested it here, tested in here, on for another test. We could see another bounce, maybe short-lived, and then if we bounce, great for the bulls temporarily. If we don't, folks, we could see a quick reaction to the downside, and not sure how hard and long that would be. But ultimately, what I'm calling for is an ultimate test of the COVID lows, right down here, eventually. Just not sure when and how fast that'll happen. But I honestly believe that if we break this 200-day moving average and the support level that we've been testing over the past month or so, we break that, I think we're going to see something like the Black Monday that we saw back, when was it? In the 70s, I think they were talking about, whenever it was. But I think we're going to see a big plunge if we break that 200-day moving average on this weekly chart. So that's something to pay close attention to over the next week or so as we go into earnings season. And I think they're not expecting earnings to be as spectacular as a lot of folks may believe, because earnings estimates have been dropped and revised, and I think that'll continue. But I think over the next week or two, folks, it's going to tell us how markets react as we test the 200-day moving average on the weekly chart. So that's something to be careful and be mindful of as we pull back today. If you look at a near-term 4-hour chart, You can see, if we look at the RSI, bottom of my chart, we head into oversold territory again. Doesn't mean we can't stay down there for a minute, even on the 4-hour chart. We did it before back in the beginning of June. Dipped into oversold territory and we stayed there. We really dropped, and before we decided to get a bounce from that after we dropped below 30,000. And we are heading back into that oversold territory again. What normally when we've been seeing this us drop in oversold territory on this 4-hour chart, sometimes that could last a day or two. So today, maybe tomorrow, we may see some continued selling pressure, but we're in oversold territory in the near term. Look at the daily chart. There's still a bit room to the downside for us to hit this oversold area again on RSI. So I think we possibly could be headed to hit that probably today. We'll have to see what happens. But again, as you can see, folks, what's happening now, what I'm noticing is that this 200-day, 50-day moving average is starting to be a strong, and I mean extremely strong level of resistance. Markets are not, seem like they're just not breaking that 250-day moving average anytime soon. It's a strong level of resistance. Every time we hit a support level, we may get a rise back up to that 50-day and then quick reversal. So this is a good this volatility and this price action is good for those traders, day traders, swing traders, all types of traders easily can hone in on these levels of resistance to take a bearish bet and do very well. So I wanted to break that down at least on one of these indices to show you guys the price action and how it is almost easy to, it's becoming more and more easy to detect as we roll through this bear market. So again, pay attention to the weekly chart, folks. We are testing a strong level of support, and we've been bouncing off the level of support over the past month. I don't think that's going to last much longer. I think we're going to break this level of support very soon. So that's something to be mindful of over the next 2 weeks. Watch out below if we break below that level of support. And we'll see the same type of scenario. We look at the S&P E-mini futures. This one, let me put up a weekly chart here and have a fib join on this one because I don't think it was quite to its COVID highs just yet. So, but it's right at the 50-day moving average. Let me get rid of this fib. Clean this up just a little bit. So look at that. Here is the COVID high right here. I mean, right before the plunge, and the 50-day moving average, I mean, 200-day moving average is just above that. But we are testing the 200-day moving average here as well, as you can see. Look at that. Testing that 200-day moving average, and right at testing that the trend channel, the trend channel, the lower trend channel line of this channel we've been in as well. So double test there. Again, if we break below this 200-day moving average, folks, watch out below. All markets are gonna, I mean, we'll probably really see a significant move to the downside before some type of snapback rally. But we're testing that level of support on the S&P minis. Look at the Nasdaq. Should be seeing the same type of scenario again. Nasdaq still haven't reached its COVID, the COVID high area where right before we had that plunge. But again, it too testing that 200-day moving average. And look how Nasdaq has really been rubbing that 200-day moving average on this weekly chart for a minute now. It's been rubbing that for a minute. You see the action right there. Look at that. Since May, we've been testing this 200-day moving average on the weekly chart, and it was like the rallies are getting shorter and shorter and shorter, lead me to believe that we are in store for a huge drop below this 200-day on this weekly chart in the near future. And once we drop below that 200-day, folks, I'm telling you, again, pay close attention to this, the futures. I really pay close attention to futures to see how they're trading. And for the past couple months, as you can see, we've been hovering just above this 200-day moving average on the weekly chart. So I think this is going to break very, very soon. And so we looked at the S&P, we looked at the Dow. We looked at Dow too. That was the first one we looked at. Yep, so same scenario. And what about the Russell? Same scenario. We are on a precipice of a major break. Now the Russell is the weakest of the weakest link of the bunch, and that's why I've been really holding a lot of Russell, a lot of IWM puts and put spreads over the past couple months, and they've been doing awesome. And the Russell just like it's just one is having the most trouble trying to navigate through this pain. So Russell's already below his 200-day moving average on the daily. I'm sorry, on the weekly, and it looks like it too hitting the area of support right at the COVID highs. So that's what that trend line represents. This trend line here represents the COVID high. All right, if we break below that, we're gonna get another big washout before we see a rally. So the next week or two could be extremely rough for markets, folks. So keep that in mind. Could be extremely rough for markets. And now let's take a look at the VIX futures. So looking at VIX futures, we're going to look at a daily chart first. So one thing, another telltale sign which you can pay attention to before we hit certain levels. So I got a lot of lines drawn here, but this blue line here represents a 50-day moving average of the VIX futures. And as you can see, price came down to this level and it's holding that 50-day moving average. Looks like we want to really take a massive bounce off of this 50-day. Look at the full wins percentage bouncing out of oversold territory. RSI starting to turn back up. Wins percentage, full stochastic is starting to turn back up as well. So all signs, all technical indicators point to a massive rally in the VIX, possibly setting up, and possibly a massive drop in stocks. So keep that in mind, folks, as we travel throughout the day. Wanted to really harp on that today. Also, I posted an article, folks, on my Twitter feed and also in Discord. And let me see if I can find it real quick. And I just saw this article this morning. I also heard about it on the news. So let me find this article. And it's something that you really got to pay attention to, folks, because no matter what the talking heads are saying, as far as we may be approaching the bottom, nobody knows that. But I can tell you this: if we look, this article really stuck out to me today. Let me see. And the headline: after worst start in 50 years, some see more pain ahead for stock market. And this was just posted on the 30th, folks, today. So, and the biggest thing that stuck out to me in this article is right in the middle of the article at the second paragraph. Stock market is on track for its worst first 6 months of the year since at least 1970, folks. We are in historic times where we could see some major, some major downside move, folks, if this continues, and this could be historic, maybe the worst, downturn we've probably seen in our history. That's what it's all looking like to me, folks. We're setting up possibly if the markets don't find some way to really reverse this what's been going on since the beginning of the year. The S&P 500 index, cornerstone of many stock market portfolios and retirement accounts, peaked in early January and has fallen since then 19.9% over the past 6 months, folks. If you friends with me on Twitter, and I also posted it on Facebook, I'll post it on our Discord as well. But pull up this article, folks. It's a good read. The economy is on the cusp of a recession. I mean, just read this article. This stuff is a really good article. And gives you some insight of how bad this year has been so far. It's starting to reach some historic levels. So this sell-off, folks, is just in the infancy stages, if you want to ask me. All right, wanted to point that out. So again, this article is posted on my Twitter feed. Here's my Twitter handle. Let's see, for those again who have not followed me yet on Twitter, I post a lot of good stuff throughout the week when I can. God's Child Tim, and for those who Want to find me on Facebook. Be found on Facebook as well. Here is my Facebook page, TimD88. That's the best way to find me. Facebook.com/TimD88. And here's what the front of my page looks like. Having trouble loading here, but you get the point. Folks, just be careful navigating through this market. We are in a bear market. No matter how you look at it, we're in a bear market, and I don't think this bear market is ending anytime soon. And ultimately, again, for those who've been following me, you know my ultimate target on this VIX. Let me pull up the CBOE VIX volatility index for the cash market. Here is the VIX that I'll be watching. I mean, the index I'll be watching once the market's open. It's cash market. You see the oscillators and the wins percentage, RSI, forward stochastics, all pointing up. And look at this. Got out of that bounce from that area of support that I highlighted over the past couple of weeks. Ultimately, I think if we break above this $40 level, folks, you see this trend line up here in the VIX, that's when we can really start to see some acceleration in the VIX to the upside and acceleration to the markets to the downside. All right, folks, wanted to point that out, and that is all I have for you guys. Take a quick glance at crude. Crude, I'm not sure, what to expect in crude as of just yet. We could be in a precipice of another rally in crude. We had to see that's OPEC meeting today, but crude is right at an intricate juncture as well, right at a level of support, right around this 50-day moving average. So we'll be watching this carefully throughout the day. If crude can get back above, I said above 113, we could see a rally back up towards 130. If crude fails this level today, we could see a huge drop back down to the 200-day moving average. So I'll be watching crude today, between today and tomorrow, to pay attention and see how crude fares during this OPEC meeting. I think which is possibly scheduled for today. All right, folks, that's all I have to share with you guys. On another indicator, one more is the dollar index. UUP is a good way to track the dollar index. For those who want to trade UUP, it's easy to trade, but UUP is what I've been picking up options on, holding for a while, and it's been another indication as to what may be going on with stocks. That every time we got to sell off on UUP back down to the 50-day, we get a little bounce. It's like we are in store for another bounce. So that's another precursor to pay attention to gauge what may be in store for our overall markets. All right, folks, enjoy the rest of your day, and I will catch you guys on the next video.